and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma. With me, as always, is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. Before that, let's have a quick look at what the markets are up to. So, Cheryl, we are off the day's highest point, but the key to watch is India VIX, a sharp fall coming in on that index.
Absolutely. Very good morning to you, Shrishti. And if you look at the India VIX, yes, it has seen a sharp drop from open levels itself, and it's holding on to those declines of approximately 18% or so at around 10.44 for the India VIX at this point in time. The markets are actually off the day's highest point, especially if you look at the Nifty Bank. That one is sharply off the day's highest point, almost 7-10% down to coming in from the day's highest point for the Nifty Bank into towards the day's low right now. Even the Nifty index also right now trading flat with a positive bias with gains of about 41 points or so. Advanced decline ratio, however, is still tilted in the favor of the gainers. We're talking about the list of gainers then. It is Bharti Airtel, 2.4% uptick coming in for that one. Apart from that, you have Grasim, HCL Tech, Tata Motors among the set of gainers. You have SBI as well, that is gaining in trade today with gains of about 1% or so. While on the flip side, it is Sun Pharma, Tata Motors, I beg your pardon, Tata Consumers, Coal India, BPCL as well as Hindalco that are under pressure. Remember, Tata Consumer is also to report its numbers later today. So let's watch out for that one. Let's take a look at what Reliance Industries is doing, because after its earnings, the stock has done absolutely nothing. Now actually near the day's lowest point, 3/10% downtick coming in for Reliance Industries. Talking about the sectoral indices and what the picture is there at this point in time. For the sectoral indices, it's a pharma index that is actually seeing a decline along with the oil and gas space, but realty index holding really strong in trade today. 2.5% uptick coming in for the realty index, followed by the broader markets holding on to good gains. So as of now, markets a tad bit off the day's highest point when you talk about the benchmark indices, but a lot of individual stocks that are moving in trade, and case in point is Tejas Networks, Shrishti.
Well, yes, what a stellar move in Tejas Network, up around 17 to 18% in today's trading session. And it is indeed a earnings dhamaka as the company swings back to profit of over 140 crores. And this is what we're going to be discussing and putting the spotlight on the buy now, sell now lens as well. So firstly, let's put the spotlight on the internals of Tejas Network. What actually changed in this quarter gone by and how are the numbers panning out? Sharad is joining to give us all those details. Take it away, Sharad.
Yes, a strong set of numbers coming in for Tejas Networks, and yesterday also we saw a bump up in the stock price. Stock went up almost 17% in last trading session. The revenue, if you look at it, that's jumped almost 137% on a sequential basis, and also there has been a significant improvement when it comes to PAT as well as company turning profitable operationally as well. We checked at the order book also at the end of Q4. The order book is more than 8,200 crore rupees, and strong updates have been coming and the guidance coming in going ahead for the company, especially in the wireless business. Over here, the 4G and the 5G RAN installation, that has actually aided the top line numbers, and also this is mostly coming from the BSNL's order book. Also, if you look at wireline business, two important updates are coming in. First is this, there are strategic deals are happening in the critical infrastructure, and secondly, they have also started going into a strategic partnership with Telecom Egypt as well. Also going ahead, two important triggers are there for the company. The first one being they are executing the largest ever networks being built. Now this is the indigenous technology for both 4G as well as 5G, and also in the route and satellite transponder. So that is something which we'll be looking out for, and currently government is also giving a lot of incentives in this segment. And lastly, they are also looking at building end-to-end telecom networks that would be margin accretive as per the analysts.
All right, thank you so much for that, Sharad, for actually telling us why such a stellar move coming in for Tejas Networks, given the fact that the company has reported profit, and this is only when you compare quarter-on-quarter basis. Last quarter itself, the company had posted a loss, and this quarter, they have actually turned positive. So that's one of the reasons why the stock is seeing a sharp rally. And in fact, the last hour of trading session yesterday as well, the stock actually saw a sharp spike. In fact, let's hear out what ET Now and ET Now Swadesh's editor-in-chief, Nikunj Dalmia, actually had to tell about Tejas Networks in particular.
Tejas is a company which is not an IT services company. They are what could be called as a back-end company which essentially is executing projects. Projects have kicked in largely because of that BSNL order, and they are implementing that. What happens after that? Now, the BSNL order will last for next couple of quarters. That may look the network the business of Tejas look very strong, and I think that number is visible. What happens after that? Can Tata's really build it up? Can they add new businesses, or post BSNL order, the number, Tejas in a sense will hit what could be called as a high watermark? That time will only tell. But for the moment, for shareholders, I think it's Tata, it's the BSNL order, it is the recent spike and the real turnaround which is happening at an operating level. See, I look at it this way, 4G from 2G to 3G, 3G to 4G, and 4G to 5G, and 5G to 6G. And that is how the telecom cycle will move. And globally also, everything is moving from 4G to 5G in emerging markets and 5G to 6G in developed markets. So if they're really able to crack the code in terms of emerging as a go-to space where they can implement large orders, which are complicated orders and which are complex, then this really could be a very big stock in coming years. But if the entire cycle for Tejas pauses and stalls after the execution of BSNL order, then this would be called as a gold rush period for Tejas, and this may just end up becoming a high watermark. Time will only tell that how much are they able to expand and how much are they able to grow now that they've got a huge backing from the Tatas.
All right, so that's the view coming in from Nikunj Dalmia, who is the editor-in-chief of ET Now and ET Now Swadesh on Tejas Networks. And what a spike this particular counter has seen over the course of 3 years alone. That is from 2021 to 2024. The stock has seen a sharp rally. But let's not forget the stock at one point in time did see a sharp drop. So let's understand what sort of a strategy should you adopt when it comes to Tejas Networks. We have our experts today, Kush Bohra on the technicals, while we have Rajesh Agarwal on the fundamentals. A very good morning to you, Kush, as well as Rajesh. Thank you so much for joining us on ET Now. And Rajesh, let me come first to you and ask you about Tejas Networks. No doubt that this particular counter has seen a spectacular rally over the last 2 to 3 years or so. But let's not forget, the stock actually gave jitters to a lot of investors when it actually saw a nosedive as well, isn't it?
Good morning, shareholders. Srishti, Kush. You said it right. It has given spectacular return. And the best part is it's justifying its name, Tejas. So market cap has gone like Tejas. It's zooming like that. 17% yesterday, 17% again today. It's the right company in the right from the right group in the right sector in the right time. This is what happened. Tejas. From the Tata Group, working on all those telecom networks, 5G and all, and as Nikunj was pointing out just now, that what happens after the execution of 5G, that's the big question, unless until they get good orders from good new orders, or they move to 6G technology and all, then it has to be seen what happens after that. So that only time will tell. But at this point of time, yes, it is belonging to the Tata Group in the 5G sector. Numbers have been very good. Q4 numbers, 147 crore PAT, 343% jump in revenue, full year order book of 8,000 odd crores. Everything is in favor of that. But after this kind of stellar return, I would wait for new entry, because 17% yesterday and 17% today, it's almost 37, 38% in a span of just 2 days. So I think one should, for new entry, one should wait for some settling down of prices. But somebody holding it can continue to hold. And with the new orders coming in, not only from India, also from around 75 countries across the world, and the recent new order from Egypt is at least a good number, at least a guarantee for a good number in the next 3-4 quarters or so. So one can continue to hold, but for new buying, one should wait.
Not to enter in fresh buys is the recommendation coming in from Rajesh, but the company is doing pretty well and in the long run can reward well as well. But Kush, let's get your take as well, because the stock has seen a phenomenal up move, and what a breakout is what we have seen on this particular counter. How exactly on the charts you're spotting this breakout, and what are the levels that you will be tracking, and do you believe that there's still opportunity for fresh longs, or you would also avoid entering at this point?
Sure. First up, hi Srishti, a very good morning to you, Rajesh and Cheryl, and to all the viewers. Well, let me also highlight one thing that you and the team have been talking about. The stock did take a bit of a nosedive, and when I say a bit, it's only relative, because if your team can pull up the weekly charts for the last couple of years, you'll find that after every sharp rise, the stock has a tendency to dip, as much as 20%, perhaps even a little more. This time around with the market, down move, the stock had actually corrected a little more than 20% as well. But for the last 4 to 5 such dips, the stock, it's actually just turned out to be a buying opportunity. So this stock is no stranger to volatility. The investors or traders who enter into this perhaps have to learn to live with that as well. But as we can see, the stock's actually turned out to be a multi-bagger. So I think every dip that comes around, is an opportunity to buy. Sure, I agree with Rajesh on this 100% that, right now with the kind of stellar moves that we've seen, the risk reward ratio for a fresh buy may not be as favorable. So perhaps any kind of dip, close to let's say 950 or 900 levels will be a very good opportunity to buy. Also because before this, dip and then the subsequent rise came about, the stock had spent a good, I would say 3 to about 4 months consolidating within that 850 to 900 zone. So if the dip does come around, I think there will be a lot of buying that will emerge around the 900 950 mark. Now, when do you get that? A little difficult to say that. But as I said, the stock has a tendency to correct sharply after sharp up moves. So just wait for any kind of fresh allocation. If you're holding an existing position with the kind of momentum that you're seeing, perhaps don't book out too early. A partial book profit is perhaps warranted, but don't book out completely. Hold and ride this momentum would be my suggestion for anyone who's holding this at the moment.
Right, the momentum is the take coming in for Kush for anyone who's holding at Tejas Networks. And yes, maybe now after the sharp rally may not be the time to enter the stock, but yes, the stock definitely looks promising is what both of our experts have to say. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now, because when we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's kickstart with taking all of your stock-related queries. Then, viewers, you know what you got to do. You have to write to us on the WhatsApp number that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, but the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kush Bohra on the technicals, while we have Rajesh Agarwal on the fundamentals. So let's kickstart taking all of your queries then. And this one is coming from Reena Thomas, who's writing to us from Kerala. And Reena is holding 45 shares of Viatech Vabag at a price of around 873 rupees per share. She wants to know whether she should stay put with this particular counter or look to exit this one. What's your take on this, Rajesh? I'm asking you this query because the fact that we have a lot of government push when it comes to the infrastructure space, when you have water-related treatment as well, where you have government trust at least for a while. One of the reasons why these counters also saw a sharp rally is on back of that, isn't it?
Yes, of course, you said it right. These counters saw sharp rallies in the back of water-related orders. And we should not forget that it's a very strong company. I would say, in other words, it's an Indian multinational company operating in a lot of foreign countries too. So that's one of the things. The other thing is the balance sheet is strong. The third one is the order book is strong. With the government focus on Har Ghar Nal Se Jal and Namami Gange project and all those things, Water is on a strong footing. And the kind of order book it has, I think any dips, like dips to the levels of 900 should be taken as an opportunity to add more to this stock. Somebody holding, continue to hold.
All right, that's a hold coming in on Viatech Vabag. Moving on, and the next query that I have, Kush, is coming in from a viewer. He didn't mention his name actually. Sunny. Okay, his name is Sunny, and Sunny wants to know, have a technical view on Clean Science Technologies. He's holding 75 shares at a price of 1352 rupees. What should be the strategy for the next 3 to 6 months?
Well, we know that the stock has been in a sharp, downturn. The saving grace is that, the buying price is fairly low as well. Now, there is an attempt that the stock is making to revive from here. So my suggestion would be from a perspective of 3 to 6 months, hold this one, but have a very tight stop loss at 1275. If that is taken out, the stock could actually go into a bit of a spiral further down. So my suggestion, 1275, hold this, with that kind of a stop loss. The attempted rebound, if and when that does become successful, then I think he could very well be seeing his cost price plus 1400 levels are also on the card. Two factors here: resistance zone plus a 200-day moving average will also act up. So while I don't see a very big upside on this, the revival could actually bring the stock up to his buying price where he can exit at a less loss or perhaps even some profit.
All right, let's take this one coming in from Jay Raman, who's writing to us from Hyderabad, has Inox India at a price of 995 rupees per share, about 86 rupees per share. Oh, sorry, 86 shares at a price of 995 rupees per share. He wants to know whether he should add some more of the stock in his portfolio. What's your take on this one? Rajesh, Inox India recently listed, isn't it a good one to hold on for the longer term?
Yes, one can continue to hold. The focus on renewable energy is going into the company's favor. It's doing very well since a very long period of time. Got recently listed. We have to wait for at least 1 or 2 quarter numbers to pour in. But going for the fundamentals as on the day of the IPO and all, I think one should continue to hold. But new addition at this point of time won't be suggested.
All right, that's the take on Inox. Moving on, and Rajesh, once again coming to you, this query is from Pradeep from Kolkata. He's a senior citizen holding 2 counters, 100 shares of Reddington, bought at a price of 156 rupees, and he also has ABB India, 50 shares, and his buy price is just 291 rupees, making great returns, at least in ABB. Whether to hold this counter for the long term, maybe for the next 2 to 3 years, or now he can look to book out some profits and rather make investment in Zensa Technologies or Suzlon Energy, any of the stock that you like at this point.
See, both the counters are great on fundamentals, I would say. ABB, it's one of the best companies playing on the CapEx story, which is going to happen in the next 3-4 years. And we're going to continue to hold the stock, even add on depths. This is a great company, strong balance sheet, almost debt free, and order book pouring, new orders pouring in every day. As far as the Reddington is concerned, fundamentals are good. One can look to book partial profit at this point of time, but adding Gensar or Suzlon won't be a suggested. Suzlon is out of question at this point of time because it has run up quite a lot on the back of stories of new raising of funds to pay off its debt and all. Yes, the debt has come down to a very good extent and almost debt free, I would say. 20 gigawatt of capacity is also good, but everything has been priced in. For Zensar, yes, one can add, but on depths.
All right, this one is coming in from Amit, who's writing to us from Bangalore. This one is for you, Kush, particularly, because he has IDFC First April futures at 83.8. He wants to know whether he should roll over this to the May series. Also, he wants to know if Federal Bank is good for May series.
Sure. So I think we've discussed, IDFC First previously as well. The stock is seeing some sort of a rebound, but on the whole, if you ask me, there is a lot of pressure on this. So my suggestion would be to perhaps, book out, IDFC First Bank. That's the view on the IDFC First Bank. Federal Bank also, from a near-term perspective, the broad range on the stock is 158 to about, 150. It could very well trade in this range with a slight positive bias. So if the 5 rupee target or the 4 rupee target is a reasonable one for him, then he can consider Federal Bank. Don't expect a great deal of momentum in either of these counters. But if I were to pick one, I would have Federal Bank over IDFC First.
All right, moving on to the next one, and the next query that I have is coming on Parag Milks. And Rajesh, Salim from Assam is holding Parag Milks 1,000 shares at a price of 230 rupees. What to do in this particular counter? First query, and the second query is on Happiest Mind. He has bought 200 shares at a price of 830 rupees.
See, Parag Milk, I think the buying price has been quite high, I would say, as far as fundamentals are concerned. Yes, the company is into limelight in the recent past, but the numbers don't justify this kind of market cap. I think one should wait for some more upside, like 235, 240 to book out and wait for new entry. And the other one you said was?
His buy price is 830 rupees.
For what? Happiest Mind, right?
Yes, Happiest Minds. His buy price is 830.
I got your point. It's a very good company into new technologies and all, doing very well, but somehow it has not performed in the last 1 year or so. We have a price target of 1,000 plus into this. And I think at around 800 levels, it's a good buy for a medium to long term horizon.
All right, this one is coming in from Radha Krishna, who's writing to us from Bangalore. This one's for you, Kush, because he's been actually monitoring Sonata Software for the longest time, and now he's saying that he believes that the stock has seen a reasonable dip. So he wants to know, this dip is the right time to go ahead and invest in Sonata Software, or should he wait for some more time, some more dip to come about in this particular counter?
Sure. So I don't think the dip is complete yet. I think, if he also tracks the stock technically, then I'm sure, his confidence, or optimism stems from the fact that, 650 is a 200-day moving average and a previous support zone. Also, the stock has entered the oversold territories. However, none of these actually really imply that, the worst is over for the stock. It's only when the price action changes for the better and gives you that signal, should you start accumulating, or should you start considering that the worst is indeed over. For me, that's neither the case. The price action is not suggesting that, nor the momentum indicators. So I'll wait for some time. I'll closely watch this 650 level, 200-day moving average support. If that does kick in and if the stock does move higher from there, perhaps makes a case for a very small, entry into the stock. But up until then, I would wait for some more time.
All right, so that's the take coming in on Sonata Software, but let's put the spotlight on Tamilnad Mercantile Bank, because that one reported his quarterly numbers. So let's take a detour and let's talk to the management of Tamilnad Mercantile Bank. We have Mr. S. Krishnan, who's the MD and CEO at the bank, joining us right now. Very good morning to you, sir. Thank you so much for joining us on ET9. Firstly, let me congratulate you on achieving the highest ever NII and net income for the year. But if I look at the quarterly figures, the PPOP, that is your operating profit, moderated a bit. Can you please explain what led to this sort of a fall, especially with the employee side, employee expense side mostly?
The major reason for that is I have made additional provision for the employees' costs. I made around 28 crore during this quarter alone towards the employee cost. So overall, we have a total provision of, we kept a provision of 84 crore. Though we are not part of the IBA way settlement, we are not a party to that settlement. We have our own internal settlement with the employees and our officers association. They have given the charter of demands just now in the month of April, but still, as a prudence, we thought that we will keep the provision. And accordingly, ever since I took charge, I have been making a provision. Last year, 22-23, we made a provision of 15 crore, and 23-24, we made a provision of 69 crore, taking to 84 crore, which will be quite sufficient for even the industry settlement, which the IBA had arrived for the member banks. Keeping that in mind, we have made the provision. That alone costed around 28 crore for me in this quarter, made in the Q4. Apart from that, when I talk of the other provisions, there was NPA accounts where, as a prudence, though not required as a prudence, we thought that we will make a 100% provision, which again came to around 13 to 14 crore, which was again in this quarter. So these are some few reasons why the profit is relatively lower than what it was, but it is at par with what it was in Q4 of the last year. Otherwise, if you look into, the performance has been good. The NPA has been contained. The NPA was around 1.69 the last quarter of December 23, which has come down to 1.44.
Hi, very good morning, Mr. Krishnan. This is Shrishti also joining in. But when it comes to the advances growth, while the banking industry grew at 13%, we reported 6% growth. Now, it was also below the growth guidance of like 12 to 15%, which you have guided earlier. So what is the outlook going ahead in FY25? Would you guide for any double-digit growth over there?
See, it's true that we have been planning to have a growth of around 5 to 15%. This is what I gave the guidance last time. You are absolutely right. But I will also like to recollect what I said, that this year, 23-24, we took a transformation process. Any transformation has got its own lead time to stabilize. The transformation process, as the initial step, we took particularly on the credit side, and that too more particularly on the MSME front. When I say so, the project is almost completed. As a part of the transformation, what we did was we have created hubs, MSME hubs at different geographical locations. I have around 12 regional offices across the length and breadth of the country. Against that 12 regional offices, I have now established my hubs in almost 9 places. The rest of the 3 also will be done in a month or so. Now, these hubs have started yielding their good results for the bank. It has a twin advantage. One is that I have posted exclusive relationship managers whose job is for the sourcing and giving to the processing team. The processing team are separate, independent. Thereby, I'm able to establish and ensure the underwriting standards are at a high level. I have posted specialized people for the underwriting at these hubs so that I can ensure the quality of the advances. Now, these have started yielding their results. In as much as the 23-24 was in a transformation and we were transforming from the good old process to this, yes, it was taking little time for stabilizing. Now it has almost stabilized. I expect that 24-25 should be a good one. Added to that, we also have plans to engage feet on street model for the purpose of sourcing, where the lead, basically a lead management can be taken. So, and also we also have taken a board approval for co-lending, which we will be taking up. With these things, I expect that 24-25, we will be able to achieve what the guidance I gave in this 24-25 and pick up to the industry level growth.
Right. One thing that the bank has actually shown is healthy NIMs as well as ROAs. So going ahead, do you foresee the NIMs will remain above the 4% level and ROA approximately around 2% or so?
Yeah, ROA, I may be able to go around 2. It may be around 1.9 to 2 range I can give. And the NIM will be definitely 4+. Will continue to be 4+.
Also, Mr. Krishnan, let's shed some light on the ongoing process of selecting the new CEO. Now, RBI rejected the candidate proposal for the position of CEO. How are you planning to proceed further? When are you anticipating this transition to complete?
So as far as this is concerned, yes, we have reported to the street is that the regulator has said that the candidates recommended by the bank was not found suitable by them and advised us to have the process once again. The process has already started. The separate search committee is in place, the nomination committee of the board, and who have taken the call, and we have also given a paper advertisement, and also maybe sourcing from the headhunters who can assist the bank. That process is also there. So this process will take its own this one, and again we will be going to the regulator. But till such time things are as it is going, the bank will be continuing to do perform well.
All right, then we leave it there. Mr. Krishnan, thank you so much for joining us on ET Now to talk about Tamilnad Mercantile Bank's quarter gone by and where you see the progress going ahead. Thank you so much for joining us on ET Now. And as we slip into a break, here's a quick programming note for all of our viewers there. Shattering the glass ceiling is not easy feat for all the women out there, but ET Now has something that can help them face this challenge and move ahead forward. We bring to you Buy Now Sell Now Women's Special with a sharper focus on women's investment goals and ACE experts who will help them actually devise a better plan when it comes to the stock investment. So mark your calendars. Tomorrow is the 4th Wednesday. That's when we will have this Women's Special. And every month on the 2nd and the 4th Wednesday, we will be having a Women's Special on Buy Now Sell Now. So yes, tune in and do write to us, all the women investors out there.
Welcome back to Buy Now Sell Now, where we get you answers for all your stock related queries, and continuing the same with two of our very special experts, Rajesh as well as Kush on the show then. And Kush, I'm coming to you for the next query because this one is coming from Bhagwan, and he's holding 200 shares of PCBL. And he wants to know that what is the outlook on this particular counter, and at this point, can he go ahead and add more of this counter? He didn't share his buy price, he just wants to know the outlook going ahead, and can he add more at this point?
Sure. Did I hear the name right? Is it coming from Bhagwan?
Coming from Bhagwan, and actually this query was addressed to Kunal, but since Kunal is not there, so let's get your take on this one, Kush.
Sure. I think Rajesh got what I'm getting at. Bhagwan se aaya to hum kaun hote challenge karne wale. No, so on a serious note, I see the stock is attempting a rebound. It had a stellar run, some time back, but I think this profit booking is actually just turned out to be a buying opportunity. For me, if the view is anywhere from 3 to 6 months and beyond, this is a good, buying opportunity. The stock has a very strong support zone close to those 245 levels. So put that as a stop loss. This is a good entry point. The immediate target for me on this stock is 290, and once that is taken out, we're looking at a 325 as well.
All right, let me take this one to you, Rajesh. Then this one is from Ramki. He's writing to us from Delhi, and he wants to know about Root Mobile. He's holding about 265 shares at a price of around 1,567 rupees per share. He's saying that he earlier also went ahead and booked some profits in this counter, but over the last 1 year, the stock has been doing absolutely nothing. Is it advisable and worth it to stay with Root Mobile going ahead as well?
But and wait for some upside to get out of this stock, because I think whatever the numbers have been suggesting in the last few quarters has already been discounted in the price. And a major upside in the near future looks very difficult unless and until the market is in a stellar bull run, which still it is now, but still I don't think there is much of an upside left. To any upside to around 1550, 1560 odd rupees should be taken an opportunity to exit.
All right, moving on to the next query then. And the next query that I have is coming from Karishma from Delhi. And Rajesh, she has shared a long list of counters where she's looking to invest around 10 lakhs of rupees. One of the name is Suzlon. We already have your take that it's an avoid at this point. But other counters in her list are Ircon, Texrail, SpiceJet. Any of the stock that you like?
SpiceJet is a avoid again because a lot of debt issues, a lot of things going against it. So let's avoid SpiceJet at this point of time. Maybe the other good stock in the aviation sector, Indigo, but it has run up quite a lot. So it needs to be avoided at this point of time. As far as the economy is concerned, considering the fact that railways are on a run with new orders and with the new government expected to continue in the next term also, we expect railways to give good orders. So both Ircon and Texrail are good. Especially we are very bullish on Texrail because of the fact that despite the stellar run in the entire railway stock, the stock has not run up with good amount of order book already strong with the company. They have new orders coming in for new wagons. So I think one can accumulate Texrail for a target of 220, 225 odd rupees. Even Tex Infra, that's a holding company of Texrail, is also on a very strong footing. So that counter can be accumulated for a target of 125. Both the counters should be accumulated for at least a time horizon of 1 year, and both are a buy from our side.
All right. This next query that I have is coming in from Hari. Okay, Hari has yet to send his list of stocks that he wants to ask query on. Let me take this one from Mali, who's writing to us from Hyderabad. And Paro Cables is a counter that he's asking his query on. 1,000 shares at a price of 94 rupees per share. He wants to know if he can book a loss and instead go ahead and buy Moschip Technologies. Also, I don't know if you track either of those counters, Kush. Do you track them?
I don't track para cables. Moschip off late has been on the radar, and if you see, there's been a bit of a spike in this. So I wouldn't suggest buying just yet. I mean, it's already run up, and if I see it across multiple time frames, it's in the overbought territory. So wait for a dip. Moschip is a buy, but I think on dips, a good level to enter here would perhaps be 130 to 135. So if you see some kind of a profit booking, then perhaps, and para cables, I don't really have a track on that.
All right, moving on to the next query, and this one is coming in from PVN Rao, who is holding LTI Mindtree with profits now. So, Kush, his query is, can he go ahead and book profits in LTI Mindtree and rather buy Coforge or Persistent System at this point in time?
My suggestion would be to first is to, of course, book profits in LTI Mindtree. Secondly, my suggestion is to wait for some more time in the IT space. A lot of these stocks have been actually seeing some sort of a selling pressure. A lot of them are testing the 200-day moving average and some of the key support zones. If this doesn't hold ground, then we could see some sort of a consolidation, in Coforge Persistent. While from a medium to a long-term perspective, we do prefer Persistent, but at the moment, the kind of downturn that the stock is seeing, my suggestion is just wait up for some time, let the fall settle, and then perhaps we can consider the IT pack. For now, the entire pack for me is on a wait and watch list.
Okay, this one is coming from Chandrasekhar, who has 200 shares of Mahindra Life. Ever since his listing, he got the allocation at IPO. What's the long-term picture for this particular counter? What's your take coming in for Mahindra Life spaces? Rajesh?
One can continue to hold. The company is doing well. The numbers have been strong. The new spaces. I think one should continue to hold with a target of 720, 730 out of this.
All right, moving on to the next query. And Rajesh, any view on Asahi India Glass? Thomas George from Kochi has said that he's already holding 500 shares. He didn't share his buy price, but in the sector and as a company, do you like this counter?
See, basically, this company is providing to OEM suppliers in the auto space, and with auto in the strong footing, I think this company is going to do well. The only problem is low volume in the counter. But since he's a long-term investor, I think volumes won't be much of a problem with investors as far as investors are concerned. I think 650, 680 odd levels is a good level to book profit. At this point of time, one can continue to hold. For any reason, if it falls to around 500 odd levels, that would be a good entry point.
Okay, Kush, this one is coming in from Mahesh, who is a senior citizen on VA Tech Vabag once again. We already took Rajesh's view on VA Tech Vabag. Our gentleman also is holding on for much lower levels. 354 is the buy price. Hold or exit right now for VA Tech Vabag?
Oh, very clear hold. Just have a chilling stop loss somewhere close to 950 levels, but ride the momentum, hold for now.
All right, Kush, Mekha, who is written to us from UAE, wants a short-term view on two counters. Firstly is Moil. She's holding 40 shares at a price of 311 rupees. And she also has Bajaj Consumers from a price of 230 rupees. Both these counters, are they hold or exit at this point in time, or maybe an advice to average out further?
Sure. So Bajaj Consumer is an exit. The stock is trying to hold on barely to support zones. But there is a lot of pressure not only on the stock but also on the entire sector. If you see, only a handful of stocks have been doing well. So perhaps Colgate Palmolive or a Tata Consumer is an alternate that you can consider in this space. But the Bajaj Consumer for now is an exit. As far as Moil goes, we are seeing a very clear recovery in this stock. The stock is now breaking beyond its resistance zones of 355 to 360. So for me, I think there is momentum that will pick up in this stock. Moil is a very clear hold. 400 is a near-term target on this.
All right, so that's the take coming in on Moil. Some details on that Patanjali misleading ad case, but we will come back and address it. For now, what Supreme Court is saying that Patanjali needs to file apology on record within 2 days. On that note, we slip into a break. We're on the other side. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of the stock related queries. Then this one is coming from Sukumar, who's writing to us from Chennai, and he wants to know about Orient Paper. 2,000 shares at a price of 42 rupees per share. He wants to know whether he should stay put with this one or look to switch out of it. Kush, what's your take coming in on Orient Paper? Do you track this one on the charts?
Well, I do. It's just that the stock's very volatile. So just like how we mentioned about Tejas Network, at the start, there has been a fair bit of volatility that the stock has seen. If you see 40 and 42, this zone is perhaps a good strong support zone. So if there's a positional bet, then perhaps I will look for this level. If that breaks, then perhaps exit. But there is a steady revival underway on the stock. Of late, we've seen a pickup in volumes as well. So I think one can stay put with this one. From a near-term perspective, we're looking at a target of 52, and once that is achieved, perhaps 56 as well is on the card.
All right, taking the next query from Gautam from Mumbai, and Rajesh, okay, this one is a technical query, so Kush, let me come to you. He's holding 1,500 shares of Wipro from a price of 463 rupees. Should he go ahead and move out of Wipro and rather enter into stocks like Industar or Voltas at this point?
So getting out of Wipro is perhaps a prudent way to go about right now. As we just discussed a while back about the entire IT pack, there has been a lot of pressure. Wipro too could continue to see pressure going forward. Industars and Voltas, both stocks have seen a fair bit of momentum. While I remain bullish on both of them, here my suggestion would be to buy on dips. Voltas and Industars, as I said, both of them are now actually in overheating territories. So wait for a dip. For Industars, a good entry point will be anywhere close to the 330 kind of a range. And as far as Voltas goes, fairly similar. The stock's already shot up quite a bit. So if you do get it close to the 1250 mark, perhaps that will be a good entry point. So buy on dips for Industars and Voltas.
All right, this was coming from Sushil Kumar from Trichy, and sorry Rajesh, you'll have to wait a bit more longer. Kush, another one for you, because it's a 2-month target that actually Sushil Kumar wants for Tata Steel, which he purchased at 139 rupees per share, NMDC at 236 rupees per share. For the next 2 months, he wants to know what sort of a target that he should look at in order to book out with healthy profits.
So a good momentum in Tata Steel. However, we are seeing a bit of a negative divergence. So there is a possibility that the stock could perhaps consolidate here after the kind of run that we've seen over the last couple of weeks. So the way I would play it is that since the stock is above the buying price, have a trailing stop loss at 157. If the momentum does continue, if the stock does move higher, then I think 172 is the level that I'll look on Tata Steel. As far as NMDC goes, here we've seen consolidation, mild negative bias. There's a possibility that this negative bias consolidation could continue. I would have a stop loss at 230. If that is held and the stock does indeed rebound, then we're looking at 250 as the first target. Not a very big momentum, perhaps coming around till 250 is taken out. For the next 2 months, 250 would be my near-term target for NMDC.
Rajesh, the next query that I have is coming from Akshay from Bangalore. He's holding HDFC Life for the past 3 years, and it didn't make any return for him till date. So should he continue to hold HDFC Life at this point? And another query was on HDFC Bank. He's looking to make a fresh investment. So given the fact that yes, the bank is doing fairly well, should he go ahead and make a fresh investment in HDFC Bank, or look out for some more other opportunities as well?
See, going one by one, HDFC Life, yes, I do agree that it has not done anything from the very long period of time, and I don't believe there are any scope to outperform the market in the near future too. The numbers have been good, no doubt on that. The company is going with great guns on the digital front, but still on the market performance, it's done nothing. It's better to switch from HDFC Life to LIC. That's doing very well. Valuations are good. It's one of the largest with around 66-67% of market share. So if somebody wants to be in insurance space, LIC is the best thing. And as far as HDFC Bank is concerned, we have been very bullish since the time of merger, and we have been advocating a buy on this, despite the fact that the last 2 quarters were bad, but this quarter numbers have been also good. And going forward to it, I think this stock is highly undervalued. When somebody should have a long-term view, by long-term I mean 18 to 24 odd months on HDFC Bank, can give you phenomenal returns. It has become one of the largest 5 banks in the world, with our expected profit of bottom line of around 80,000 odd crores in the next 1 year or so. That's phenomenal, I would say. 1500 levels is a very good level for long-term investors.
All right, and with that, let's kickstart with the rapid fire then. This one has come from Satya. Aster DM versus Kovai Hospitals. Which one has better scope for value buy? What's your take on this, Rajesh?
Aster DM is a very good buy. One can go long on this. After the selling of your GCC component, it's a good buy.
Okay, Rajesh, the next query that I have is coming in from Hindenburg, on Hindenburg Cement. Viewer named Sham from Kolkata has purchased 200 shares at a price of 250 rupees. What's your take on this one?
Continue to hold.
All right, this next query that I have is coming from Bala from Chennai. Keynes Technology at current price does look good. What's your take coming in on this, Kush?
Yes, can be bought. The stop loss here would be 25.50, and the targets that we're looking at are 27.50 and then 28.25.
Kush, technical view on Aarti Surfactants. Vinod is holding 100 shares from a price of 750 rupees.
Exit.
All right, Rajesh, between PNB Housing and this Canara Bank or Can Bank Housing, Canfin Homes, that is, which one do you think is better, PNB Housing or Canfin Homes?
See, I have a third choice, LIC Housing Finance, but still, out of these two, Canfin is better.
Okay, Rajesh, any view on RK Forgings? Venkat Ramani wants to know that is this a good stock to enter afresh?
See, it has run up quite a lot. I would say almost twice the price in the last 1 year or so, but still strong buy from a side. Maybe 900 odd rupees is quite possible in the next 1 year.
All right, this one is coming from Orson from Goa. He wants to know about Polyplex. Is that a good company to hold on to, or should one exit from the portfolio? The buy price has not been given. What's your take, Rajesh?
Hold.
Okay, Kush, what's your view on Naveen Fluorine? D. Majumdar is holding 32 shares from a price of 3640 rupees. Can he go ahead and add more at current market price?
Yes, you can add more.
Okay, this one is coming from Sadhu from Chennai. He wants to know about LT Foods, 120 shares at a price of 109 rupees per share. What's the near-term target for LT Foods coming in, Kush?
For LT Foods, the first target that I have is 235, and once that is taken out, 255 is the next level to watch for.
All right, but with this, viewers, it's time's up in this edition of the Rapid Fire session as well as on the Buy Now, Sell Now show. Thank you so much, Kush and Rajesh, for joining us today and helping all of viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.